Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investors Services International Limited. I'd like to bring you some foreign exchange charts today. And the first one I'd like to look at is the euro against the dollar. If we look at this chart, we can see a bearish black crow yesterday and continued follow-on low to the recent key reversal down, though obviously not to the weekly key reversal up of last week. The market once again utilised a broken September to date downtrend, currently at 118.20, to cap the market as it punched down through the short stroke medium moving average, currently 117.78, and all the way down to the neckline for the small August to September head and shoulders top, currently 117.41. This is where the decline halted before moving up to close right on the short stroke medium moving average. So far today, we're either side of the short stroke medium moving average, trying a little lower but not venturing too close to the neckline as yet. Please note, we have the rising medium moving average, currently at 117.05, now entering the frame. The next chart to look at is cable, aka sterling against the US dollar. A bearish harami yesterday, right at the top of the market, and an interesting allergic reaction to the combination of, one, testing the significant 50% Fibonacci line for the whole of 2016 at 132.33, and two, seemingly deserting the recent and hugely significant market attractor of what looks like a discredited yet somehow still valid second larger rising bearish bump and run reversal trend line, currently at 130.69. This was the furthest the market has stepped away from this indicator of the bullish angle of attack. So far today, a follow-on to yesterday's bearish harami as the market moves closer to the discredited bearish bump and run reversal trend line. The next chart to look at is euro against sterling. Now, on the surface and on its own, yesterday was a spiking lower indecisive doji cross, holding as it did on the previous support of the low 88.60s. It was the second consecutive close below the rising long moving average, currently 89.31, and the lower wedge trend line, currently 89.62. It was also a second spike below the key 50% Fibonacci line of December 2019 to March 2020 move at 88.89. All this seemed to set the stage for a move down from the late September to date descending wedge pattern towards target X in the 87.75 area. However, there was also something else going on. Tuesday's big drop and yesterday's indecisive doji cross have set the stage for a three-day pattern known as a bullish morning doji star pattern. What would be needed to fulfill such a pattern is a strong move up and close higher today. So far today, yes, we have indeed had a strong move back up through the long moving average and currently testing the bottom of the descending wedge pattern. It now depends on two things: a strong close up today, and two, if we break up back into the descending wedge pattern, because if that happens, then the whole of this week's move down could be seen as a false break lower. Watch this space. Next chart to look at is the US dollar against the Indian rupee. A third bullish white soldier and second consecutive bullish opening white Mariposa. It was the second clear consecutive close over both the descending medium moving average, currently 74.18, and the 50% Fibonacci line from September 2019 to April 20 at 74.25, and inside all the congestion around it. Prices once again tried higher through the congestion, but balked again at the next resistance, the rising long moving average, currently 74.58. So far today, an interesting day. Continuation of the bullish incentive for move now over the long moving average and towards the downtrend for 2020, currently 74.82, and its partner, the 50% Fibonacci of the April to September move at 74.87. This is all becoming very, very interesting. Finally, the US dollar against the Brazilian real. Another small range yesterday, but an interesting one. This time it was a clear pattern, a bearish dark cloud cover pattern. It was capped on the top side, but the medium moving average, once again, currently at 544.79. And much as I said yesterday, the market seems to be taking a rest around the 50% Fibonacci line for the May to June action at 539.29, which is where it closed last night. Below, we have the breach, but still seemingly valid lower bull channel line, currently at 533.68. The really heavy support is at the long moving average below, currently at 528.14. It'll be interesting to see if these are tested today. And that about wraps it up. So stay safe in the markets and in real life.